Welcome back. Joining us to put the day's markets action into perspective is independent analyst Nkosilathi Dube. Nkosilathi, thanks so much for joining us today. Now, it's been a very busy week for markets. We had things play out on the political front in the US. We had earnings season taking off that side, as well as some economic indicators coming through. But I guess something that's been really interesting is that rotation out of tech stocks that we've been seeing. Let's start there, right? Initially, we saw that dovish Fed stance fueling, the move into value stocks, further being spurred by that Trump trade. Just walk us through what you've made of everything that's played out so far.
Yeah, so thank you very much for having me. With the tech stocks, it looks like there is some sort of profit taking going on now, especially after the run up in the recent trading periods. We've seen tech stocks really reach some heights. So I think now at this point, investors are now looking to take some cash, back into their pockets. And that's why we're seeing a bit of a dip lately.
Mm-hmm. Now, we've got the tech companies releasing results next week. I think there's Microsoft, Alphabet, as well as Tesla. Do you expect to see, investors, traders kind of going back into those stocks?
Yes, certainly. I think tech stocks have been really doing great lately, especially in this phase that, artificial intelligence has been essentially taken over. So there is potential that the results could come out pretty decent, opening the door to some investors wanting to take some positions in the stock. So there is a likelihood that the buying could come back into the market.
And Nkosilathi, they are really expensive. So I do get, this profit taking that we have been seeing. Sticking with those tech stocks, Netflix out with upbeat numbers yesterday. Advertising really, becoming an important business model for the group. I mean, the advertising supported membership shot up 34% during the period, and it said it's also on track to meet its full year revenue growth target. Talk us through, your reading of those numbers.
Yeah, I mean, Netflix did report decent results, to be fair. They added about 8 million subscribers, which is a big deal. Revenue was up about 17%. And, you can start to see that the cracking down on the password sharing that they started implementing last year is really reaping some of the rewards, especially now. The only issue now is that investors and market participants have been looking at that guidance for the third quarter, and they weren't quite impressed, because it was slightly lower than expected. But if you look at the full year figure, it is expected that the revenue is going to grow by about 14 to 15%, which is slightly up from their last projections. So I think Netflix could be in a good space in the moment, and there is some potential for upside growth, and it is one stock to keep watching.
That password crackdown really, really broke my heart because sharing is caring, Nkosilathi. All right, let's move over to what's been playing out in China. At the beginning of the week, we saw those GDP numbers, growth on that end, slowing in the second quarter to 4.7%. This, of course, was below analyst expectations. We also had that third plenum meeting. And, it doesn't seem like the outcomes from that meeting have pleased markets?
Yeah, right. I mean, the meeting was quite a big event, but I think it all boils down to the outlook of the economy, One of the highlights was that the economy is somewhat strained. The 4.7% figure that we saw on the GDP growth for the second quarter, it was less than expected, and that was a little bit concerning for analysts as well as, investors, especially considering that was the slowest pace of GDP growth in over a year, if you understand. So it was quite concerning. But on top of that, the industrial sector and the retail sector kind of showed a slowdown in its growth. And that also is a sign of a strained economy. So, yeah, I mean, all eyes will be on China going forward, just especially looking at how the growth lately hasn't really been as expected.
And how much of an impact does, China's growth prospects have on, the sentiment around emerging markets in particular?
Well, I mean, what happens in China essentially has a great deal of an impact on the emerging markets. If you look at South Africa, for example, China is its biggest export destination. And so if there is some sort of weakness in China, that could cause a lack of confidence in the local markets, because at the end of the day, if there's a slowdown in China, it might filter down to a slowdown in the economic growth of South Africa and some emerging markets in some cases.
So yeah, we'll be keeping an eye out on, what happens on that front. I think we can expect more stimulus coming through. And even when you look at the property sector, things aren't really looking good for China. Let's bring it back home. We had the SARB keeping rates unchanged yet again. Of course, this was expected. But the interesting thing here was that it wasn't a unanimous move, with 4 members of the MPC in favor of a hold, while 2 members were in favor of a cut. Does this provide some comfort, considering that it does shift sentiment a bit and kind of says that rate cuts could possibly be around the corner?
Yes, I mean, if we have some members now opting for, a rate cut, it is a good sign that we could be headed in that direction. But on top of that, if we look at the global economy, we have been seeing a slowdown in inflation, which opens the door to rate cuts, especially given that the higher rates were meant to essentially stifle inflation. So with inflation now coming down, especially the rate of growth in particular, you'll find that there could be an opportunity for cuts to be made. And looking at South Africa, although the inflation rate is currently at about 5.2% as of May, it's still above the mid-range target of 4.5%. So there could be a likelihood that rates might still remain a little bit high, but at the same time, if there is a sign of inflation coming down, then definitely the door could be open to a rate cut in the future.
I mean, there is some breathing room for the SARB if we are being honest. The Rand, doing really, really well. As you said, inflation still high, but we are somewhat, tapering off a bit. And that global picture, as you mentioned, is improving. Nkosilathi, before I let you go, let's just get your stock pick.
All right. I think my stock pick for the week would be Karoo. It did pretty well. We saw some really decent results in the past week. There is a sign of health in the underlying business overall. We saw subscribers go up about 17% to a figure just over 2 million. And that also filtered down to the revenue. The revenue was up to now 964 million, a significant change. But as well as the bottom line also had a bit of benefits filtering down, and it also increased as a result. So definitely Karoo for me would be one to look out for.
And Cartrack really not showing any signs of slowing. It really is doing good. Nkosilathi, thanks so much for your time and those insights and just taking us through the day's markets action. That was independent analyst Nkosilathi Dube.